Yeah, awesome. Journal entry, I was at journal entry. So the golden rules are debit for personal account, debit the receiver, credit the giver, and alternatively debit the debtor, credit the creditor. For real account, debit what comes in, credit what goes out. For nominal account, debit all expenses and losses, credit all incomes and gains. So whichever account is coming as debit, we will mention first. The entry will say, this account is debited, and the credit part we rephrase it to that account. Instead of saying that account is credited, we say to that account. That means the exactly same thing, just a simple rephrasing is done. So once we are done with the journal entries, then we will push to the ledger. In ledger, very quick recap, we have a debit side, we have a credit side. Whether a particular entry will be posted in the debit side or credit side will be determined by one question: whether that account is debited or credited in that particular entry. If the account is debited in that entry, it will be posted in the debit side. If that account is credited on that entry, then it will be posted in the credit side. The particulars of that posting in the ledger will be the other aspect of the transaction. So if my entry says cash account debited to RAM account, in the cash account, we post it in the debit side saying to RAM account with the amount. The only difference in the credit side is we rephrase it to buy that account, buy the other aspect. Instead of saying to, we say buy the other aspect. Then we come to the balancing of the ledgers. Very quickly, balancing we do like this. We find out the higher amount in both the sides. Whichever side is the higher, we put that higher amount in both the sides. Then in the lower side, we find the balancing figure. And often we name it as carried forward. So whichever side it is, suppose it is in the debit side, it will be to balance carried forward. It will be, if it is in the credit side, it will be by balance carried forward. Whichever side we have put that, we will post another entry to the opposite side saying balance brought down or by balance brought down, as the case may be. The relevance of this carried down and brought down, as I have told, is to determine what type of balance that account carries. So whether it is a debit balance, whether it is a credit balance, we will determine by simply looking at the brought down entry. Whichever side the brought down entry is, that balance will be the characteristic of that account. So if we have in cash account the brought down in the debit side, then it will be a debit balance account. As simple as that. Once we have determined that, we go to the trial balance. In the trial balance, what we do is all the ledgers, all the ledgers we have actually recorded, each of those name of those accounts will mention in the particulars in one column. Then we will have one more column for debit amount, one more column for credit amount. If the account is a debit balance from the ledger, then we'll put that amount, the final balance of that account, in the debit side, debit amount column. If it is a credit balance, then we will put it in the credit amount column. Now, once we add all the debits and credits, once we have put them, then it should match. If it's not matching, then we have done some mistake. Here, let me introduce one more thing. If you think logically and actually you practice few questions, you will get to know, certain accounts will always have one type of balance. So what I mean is, cash account will always have debit balance. Cash account can never be credit. Very simply, if I say, if you see the cash account here in our case, so this is the debit side and this is the credit side. If you can very quickly, just an observation type, if you think about it, in the debit side, all the receipts are coming. So when the business is receiving capital, when the business is receiving loan from RAM, sorry, not loan, that is a payment for sale of furniture. When the business is receiving cash from Mr. Ram. So all the receipts are in the debit side and all the payments are in the credit side. That's what ultimately happens. Whatever logic we put in, in the journal entry, in debiting, crediting, then posting into the ledger, ultimately this is what is the result is in the cash account. I'm not talking about any other account now, only in the cash account. All the receipts have come to the debit side. All the payments have come to the credit side. Now, can the payments be more than receipt? I don't think so. It can never be. If it is a bank account, I could understand. There is a concept of overdraft. There is a concept of loan on current account, and there are other concepts as well. But if we are talking about hard cash, cash notes, we can never pay more than that we have received. So this side will always be more than this side. Debit side will always be more than credit side. I'm just putting in one thought, which would help us in solving questions in a quicker way. that for few accounts, the type of balance will always be same. For cash account, it will always be debit balance, because receipts will always be more than payments, which meaning thereby debit side will always be more than the credit side. Definitely that means that it will have a debit balance. Having that said, then what we did was we had started with the final accounts. In final accounts, what we did was I introduced the concept of asset, liability, expense, and income, and I told how expense and asset are similar. The similarity is cash is always going out. Liability and income are similar. The similarity is cash is always coming in both the cases. Sorry, it's somebody asking something. Okay. All right. Now, yes. What we did was we also linked the concept of asset and liability to the type of accounts here. If you guys can see this portion, we saw how all the incomes and expenses go to the profit and loss account to determine the profit and loss, how assets and liability go to the balance sheet to determine the wealth, and how incomes and expense are always the nominal account and asset and liability are always personal and real account. The only difference, the only exception here I mentioned, which account do you can somebody remember? The only exception to the income or expense nominal account I told?
Purchases and sales.
Yes, exactly. Purchases and sales. So purchases and sales, even though we consider it as a real account, still it will go to the profit and loss account. Now I'll tell a little bit more about it. Why that is an exception really. Let me start with this. Today, if you go to Google and search a very simple question saying that, purchase account and sales account, is it a real account? Is it a nominal account? You will actually find two sets of thoughts. In fact, as of today, big authors also differ in this point. Some people take it as real account, some people take it as nominal account. The reason for that is very simple. Both of them give the same result. Ultimately, we will always get to the same result. The only difference is when we are taking one approach at one particular aspect, the kind of exception nature we will have to bring in, saying that, for general rule, this is the exception. And for the other way around is also there. What I mean by that is this, like we saw here, we are actually considering the sales and purchase as a real account, but again, we are taking it as an exception when determining what statement it will go to, whether it will go to the profit and loss account, whether it will go to the balance sheet. If we take it as nominal account, suppose just for example, we are just bringing in this thought, then we will delete this thought. Just like that, we're bringing in. If we are having, we are taking the sales and purchase as nominal account, what do you think? What is the sales? Is it an income? Is it an expense?
Income.
Awesome. And what is a purchase?
Expense.
Perfect. Now let's go to the entry in which we actually recorded these two. The entry was this. So we had purchased some goods for cash. The entries were purchase one of the aspects, cash one of the aspects. Now we are taking it as nominal instead of real. Now we determined that purchase is just now you told it's an expense. As per the rule, if you remember the rule, our nominal account rule is debit all expenses and losses, credit all incomes and gains. So it will still be debited. Can you make sense? And ultimate result is coming out exactly same. Even if you take it as nominal account, it will still be debited. I'll very quickly go to the sales also. The sales entry is here. Sorry, 1 second. Where is the sales? Yeah, I got it. So sales entry is here. Now we had sold certain goods to Mr. Ram for 200,000 here. Instead of what I'm putting in, the logic that I'm putting in here is instead of taking real account, we are taking the nominal account, and we are seeing how the result is not changing. So had it been nominal account, we will apply the same exact logic. Nominal account rules is debit all expenses and losses, credit all incomes and gains. Here sale is income. Just now we actually determined. So as per the golden rule, it will be credited. Ultimate result is exactly same. However, it will help us if we take it as nominal account. It will help us in determining what statement it will go to. So we can easily determine if it is a nominal account, it will go to the income and loss. However, if we take it as a nominal account, the problem lies in return inward and return outward. In that case, I'm just saying, forget about that right away. We are not going to go into that criticality. I'm just saying, if we take it as a nominal account, there is another difficulty in which we will have to say, no, this is another exception to that rule. And we will have to apply certain other logic to it. And because of that only, this is a kind of exception. So I just wanted to put it right there, that the reason for this exception is because there is a different sets of thoughts throughout the market, and you can actually find big authors differing in this. In fact, in their textbooks, including the university textbooks, they have this difference of opinion. And any way you go, ultimate result is exactly same. It's just that you will have to remember which part is the exception. Now, forget about the nominal part. Like I said, I'm just bringing in that idea. We'll delete that idea. Delete that idea. We'll do exactly the same thing. Purchase is a real account because it is representing the goods. Sales is a real account also because it is representing the goods. However, while posting to or including or doing the final accounts, including those in the statements, those are profit and loss account and balance sheet, we will consider it as an exception to the normal rule that we have, that all the nominal accounts will go to the profit and loss and all the real and personal accounts will go to the balance sheet. Any doubt on that?
No.
All right. I'll take that as a no. Let me move to the next topic that I wanted to cover, which is I want to talk a little bit more about the assets, liability, expense, and income. Until now, anyone in doubt? What are these four things? Any confusion in this? Because we are going to deal with it a lot now. So let's be very clear about what is an asset, what is a liability, what is an expense, what is income. Okay. So I'll just repeat very quickly: asset and expense. For both of them, cash is going out. The only difference is expense is something that we are going to utilize in a whole year, in a particular year. And I gave the example of suppose I think the room freshener. When we purchase that, this is not an asset because it is going to be consumed in a particular year. So that is an expense. So why we are actually determining these four things, why we are categorizing all the accounts, those are in the trial balance into asset, liability, expense, and income, because we want to find out what is our income this year, what is our wealth after this year. It's as simple as that. And in order to determine that, we will have to categorize which ones are actually our income, which ones are expense. Then we will deduct the expense from the income to find out what is our income. Then we will have to categorize those into rest of the items into what are the assets and then what are the liabilities. Once we do that, then we can find out what is the wealth of us as of today. Obviously, as a future directors or managing directors of companies, we will need to know today how much of cash do I have? Today, how many computers do I have in my company? Today, how much of investment do I have in the company? How much of that I owe to somebody else? Obviously we would want to know. Suppose we started a new project. How do you know that that project is successful? Can I have some input on that? How do you know that a project, new project you started, then it got completed? How do you know that is successful?
Income is more than expense.
Yes, that is the basic thing that always comes. Obviously, you can say feedback of the client and satisfaction of the employees if they're satisfied with that. Those are all different factors. But the money should come to the organization, and whether we have actually earned money, extra money out of that project, is to find out what is the net income of that project. So this is the way we do it, and so. In order to do that, we will have to categorize all the accounts, those are there in the trial balance, into four categories. One is your expense, one is your income, one is your asset, and one is your liability. Income, expense I have already told, which you are going to consume in a particular year. So examples are like salary that you are paying to the employees, that is an expense. Suppose you are paying some transportation charges to move your goods from one place to another, that is an expense. Like I gave the example, I think yesterday when we were discussing about our restaurant, anything that you purchase, any vegetable, all of that, salary of the chef, then you have salary of the, those cleaners and all of that, that goes into the expenses. Can somebody tell me what are the incomes then in case of a restaurant? What could be the incomes?
From the bills, no?
Items. Yes. Whatever we charge to the customer when we are selling the good food to them. So that's the income. Anything else that can be income? Can somebody come up with for a company? If we have invested some money in the fixed deposit, so interest will be there. That's an income. Suppose we purchased a big supply from a particular supplier, food vendor, and they were so happy that they gave us a discount, a big amount of discount. That's an income for us. So that could be some other scenarios. We will deal with them as and when they come. So now what are the type, what I'm exactly referring to when I say expense and income. Let's come to asset and liability. Asset, like I said, it's exactly the same, similar to expense. However, the difference is the time in which we will get the benefit out of it is more than 1 year. I gave the example of table, chair, machinery, building, land, and so on and so forth. I think yesterday when we were discussing about the restaurant, I gave the example of chair and table, simply the chair and table on which the customer is going to sit and have the dinner or lunch, as the case may be. So those are the assets which are contributing to the core business. They're supporting the core business. They are not the core business. Now, if I have already told what is an asset, what could be a liability? Can you guys guess what could be a liability? I think we have already discussed. I'm just repeating this concept, but I just wanted to shed some light on it. Or if not, what is a liability? Can somebody give me some examples of liability?
Money we have to give back after some time.
Okay, awesome. And?
Rent.
Rent, when you say
that's an expense, no?
No, I got her point. So she's thinking that we haven't paid yet. So rent that we have not paid yet, that part, which is called rent payable. That's what you meant, right? Meant to say?
Yeah. Yes.
Yeah. So rent, as you said very correctly, rent is actually expense, but rent payable is a liability. When until the point when you pay that, that's a liability. I got that point. Anything else?
Salary to the employees.
So exactly same concept, because you are assuming that salary is due to them. Salary is not yet paid, right? So salary, yes. When you say just salary, it's an expense. However, salary payable is a liability. Oh. Does that make sense? Can you guys make a difference between those two? Salary on one side and salary payable is another one. Anything else, guys? Suppose we have taken a loan from a bank. That's a liability, right? I think yes. I gave the example of bonds payable last time. So we have received some deposits from the public, and we have had an agreement with them that we will pay them interest, and after a few years we will pay back the money to the public. So those are bonds payable. So that is also a liability. So now you can understand the logic of the liability. Now in assets, I have already given the example. I think we are very clear about what are the assets and what are the liabilities. We are done with these two. Let's differentiate between. Sorry.
Yeah, one question I have.
Go ahead.
So in trial balance, it's just that we have to do the entries according to these things, like cash. If it's real, then it will be in debited, and then like whatever the formula we use it. So that it's just that we have to do the entries, like everything we have to write down here in debit and credit. We have to just make the entry and it's done, right?
When you're talking about the trial balance, now you're talking about the entry. So let me repeat one concept, then I'll come back to you. When we see a trial balance, sure, that means the journal entry and ledger is already done. How many of you agree with it?
Yeah.
Right? So once the trial balance, you can see there is no entry need to be done, right? Because entry is already
Right.
done.
Right.
Now please repeat your question. Now I want to understand.
So once ledger and generals are done, then how we have to take it to the trial balance? We just have to take those entries and keep in this format. Is that so?
So the way to do it is like this. So suppose in this example, we have all these types of accounts. So we have gas, then we have capital, then we have purchase, then we have Mr. Abdul. So within the same logic of preparing the ledger, we have already prepared the ledger. You don't have any doubt in that, right? We are clear about it?
Yeah.
Awesome. Now we have already calculated the balance of each of those accounts. That is also clear to you, right?
Yes.
Awesome. Now, what we are doing in the trial balance is we're just writing this name of the accounts one by one. So cash, capital, purchase, Mr. Abdul. I'm coming down here. I've already done the exactly same. Cash, capital, purchase, Abdul. All of the account names I have already written. Then what I do is I go to the ledgers again. Once I have written all the names, I see whether the cash account has a debit balance or credit balance. Can you tell me whether it has a debit balance or credit balance?
It's debit balance.
How did you determine? Very simple rule is whichever side the brought down is. Very simple rule is whichever side is brought down is, that balance the account will have. Very simple. It's okay. No problem. By the time we'll practice and again discuss, we'll remember it. That's no problem. So like I said, I'm repeating the concept. Whichever side the brought down is, that balance will be the characteristics of that particular account. Now that we have determined the cash account is debit balance, what we will do is we'll take that balance, which is 463,000. Next to cash, which you have mentioned, we'll write that down in the debit side. Did you get the point?
Yes. Yes.
We'll repeat the same process for rest of the accounts.
Okay.
We will go to that account. We'll see what balance it is. We'll come back next to that account here in the trial balance. We'll put the amount in debit side or credit side as the case may be. Does that answer your question?
Yes. Yes.
Awesome. Awesome. Yeah. Now that we are clear with it, let's go to the asset and liability.
Dheeraj,
so what will happen?
One small doubt, Dheeraj. Now you have a stake in one company, the shares of the company. For company, those shares are asset or a liability?
That's a really good question. So now, when we think about the shares, that means they are the owners, isn't it?
Yeah, exactly.
So when we say shares, those are the owners. If you can see in this small example, so this actually is not covered in our course. So there is a separate segment of accounting called company accounts. So that is specifically for shares, bonds, and forfeiture. Then we have premium, discount, and so on and so forth. All of those covered. That is not applicable in us. I think we probably have that in a different semester. I'm not sure though. But just because you asked here, oh, it is going to be end. All right, I didn't know that. Ranjana, I think last time you converted it, right, to full-time thing. The limit didn't apply to us.
Sorry, what?
I think last time, if I remember, you converted the meeting to instead of being a free one to another one, so that we can continue after that. Otherwise, in a few minutes it will end only.
It comes at the end.
Okay. Should I make you the host?
Meeting, it gets converted.
Okay. Fine, we will see that. We will say if it ends again, we will join back in the same link only. I'm not creating any more link. I think that same link will work. You guys told. So we'll join back in the same link in case that happens. That's no problem. Now to answer your question, now that we know that shareholders are the owners. That means shares are the owners. Now I'll ask you the question here. Where do you think owner's money is?
Capital.
Yes. So capital comes under which part? If you can see very quickly, personal, right?
Personal.
That means it's definitely going to come in the balance sheet. Now, whether it will be asset, whether it will be liability, I'm going to ask you the question. Is it an asset? Is it a liability? Is it something that you own, or is it something that you owe to somebody else?
From the company, it's owed to someone else.
Yes, because you owe that to the owner. Very simple. So it will come in the liability side, right?
Okay.
Yeah.
Got it.
So yeah. Now let me quickly come. Any other doubts, guys, on this? Okay, I'll take that as no. Now we're coming to, I'll just quickly talk about how to differentiate between asset and liability. I just in this example, I brought in a concept of whether it is something that you own or it is something that you owe. You know, answering this question, we can quickly determine whether something is an asset or liability. Why I'm jumping to that, before that, let me quickly revise what we have already done here. After we populated the trial balance, then what we did was for each of those items, we determined whether it is a real account, whether it is a personal account, whether it is a nominal account. Now, again, rules for that is very simple. Same rule that we had already applied in the journal entry, we can apply whether it is a human being, whether it is an entity, whether it is a representative personal account. Answer to any of those three questions is yes, then that's a personal account. If the answer is no, we'll go and ask another question whether we can feel and touch it. If the answer is yes, then that's a real account. If it's not, then nominal account. Now, why we are determining whether it's real, personal, or nominal account? Because we want to figure out whether it will go to the balance sheet or it will go to the profit and loss account. As we have already determined, if it is a nominal account, it will go to the profit and loss. If it is a personal real account, and it will be the balance sheet. I'm quickly going because I'm just revising. We have already discussed all these concepts. Now, going to once we have done that. So in nominal accounts, because we have determined that nominal accounts will go to the profit and loss, so it will be very easy to determine whether it's an income or expense, because income or expenses are like very different things. So it's very quickly we can determine. Like if I say salary paid, that's also absolutely an expense. If I say discount received, then that's definitely an income. If I say sales, then that's definitely an income. Purchase, that's definitely an expense. However, that you could have doubt between asset or liability. That's why I just wanted to quickly revise that. Asset or liability, as I told, if you own something, that's an asset. If you owe that to somebody, then that's a liability. If you own something, that's an asset. If you owe that to somebody, then that's a liability. Let's quickly go to capital. We have already determined just now that that's a liability because you owe that money to the owner. Let's come to Mr. Abdul. Do you own Mr. Abdul or do you owe to Mr. Abdul?
We owe to Mr. Abdul.
Oh,
Yes, exactly. So that's a liability. That's a liability. And then we come to Mr. Ram. So here I cannot really say that you know we own Ram, but Mr. Ram definitely owes something to us. In our example, if you remember that example, Ram actually we had sold some goods to Mr. Ram for 200,000. Then we received a cash for 150,000. Can you guys see? Here we sold, then we received 150,000. So he owes us 50,000, right?
right.
So we have
that's
to
an
be
asset.
referencing the ledger when we are doing this.
No. I'm going to give you a shortcut as well right away. So I'm just giving the concept, then I'm going to go to the shortcut. Okay. So when you go to a personal account, whichever is a personal account, if the amount is in the credit side, that's a liability. If in the personal account amount is in the debit side, that's an asset. That's the shortcut to determine. Very quickly, again, if the personal account, whichever account we have, if it is in the credit side, that's a liability. If it is in the debit side, that's an asset. But the concept is, if that amount you owe to somebody else, that's a liability. Somebody else owes to you, then that's an asset. I think that's pretty much clear, isn't it? Any doubts on that? Awesome.
No, there's nothing.
Awesome. Now let's quickly go to this small trial balance. I'm again calling it a small trial balance because we'll have some bigger ones, little bigger one, maybe double this size, because we already have that question with us, exactly double of that size. Let's quickly determine prepare the profit and loss account. So in profit and loss account, you will have a debit side, you will have a credit side. Debit side is nothing but expenses, credit side is nothing but the incomes. And Then what we will do is in the debit side, we will put all the expenses. In credit side, we'll put all the incomes. Now, what I will do is I'll go to the trial balance item by item. I'll determine what I'll maybe find out which ones are the nominal accounts. Then I'll determine which side it will go to. Let's go to first one. Real account, no. So because that will go to the balance sheet. Personal account, no. Go to balance sheet. Real account, no. Go to balance sheet. Then personal account goes to the balance sheet. This one is a nominal account. Now, freight charges. Is it an expense? Is it an income?
Expense.
Awesome. Now I can actually give you another shortcut for expense and income exactly similar way. If it is in the debit side, that's an expense. If it is in the credit side, that's an income. I'll repeat those two. Let's not confuse. Let me write that down as well somewhere. Give me a second. So for profit and loss account, better you also write it down somewhere. So it will, all the expense and incomes will come. So expense and income are nothing but whichever you have determined as nominal account, which have a debit balance. Does that make sense?
Yes, yes.
Awesome. Incomes are nothing but whichever are the nominal accounts, which have a credit balance. As I say all the time, there will be exceptions. 90% of the cases do go by the general rule that we, or general method that we follow, but there will be some exceptions to it. As and when they come, we'll deal with those exceptions. Then we come to the balance sheet. It will cover assets and liabilities. Assets are nothing but real or personal account. Whichever are, which balance? I told already. Debit or credit?
Debit.
Awesome. And liabilities are the real or personal account, which are credit balance. So very simply, you can actually recall by these rules. Now that we have determined that, what we will do is, we will go to each item now. Now freight charges, we have determined that is an expense. Let me put it as like this. So I'm just putting it here to freight charges. Why I'm putting it a little down, not as a first item, I'll tell little after some time. So the amount is 1500. Do we have any other nominal account? We don't, right? Only one nominal account is there. No other nominal account is there. However, two of the exceptions, those are purchases and sales. Those has to come to profit and loss account only. We have already discussed.